Hey, this is David Campbell from hassle-free-cashflow-investing.com, and I am here with my friend and business associate, Leah Slaughter.
Hi, David. Thanks for having me.
Leah owns one of the largest property management firms in the Dallas-Fort Worth metro, and we started working with Leah in a property management capacity and really enjoyed the transparency that she has and the quality of service that she provides, and just a very pleasant person and honest person to do business with. And so it's my great privilege to recommend Leah and her company to all of the hassle-free cash flow investing audience. And as most of you know, I owned a home building company in Dallas Fort Worth, and during the Great Recession, built a significant number of the starter homes in the Dallas Fort Worth metro. And just as my life progressed and I became more and more of a passive, hassle-free investor, like I teach, I have gotten out of the role of building and more in the role of lending and network developing. And in my network, a very strong person in my power Rolodex is Leah and her Rolodex. And Leah, being one of the largest property managers in the Dallas-Fort Worth metro, has extremely strong relationships with all of the builders in the area that have a product that could work well for investors. And many of the investment houses that we're going to talk about today, if not all, are off-market listings purely based on relationship, the power of the relationship. And because you have a relationship with hassle-free cash flow investing, and I have a great relationship with Leah's company, and Leah has a great relationship with builders, that is how the power of relationships work. And it's all about volume, right? And so many of you at home have a relationship with me, and I can bring that buying power relationship to Leah. Leah can aggregate many people like me into representing builders and have an even greater buying volume. It's kind of how Costco works, or any large retail organization would work. And so by being a listener on this call today, you have access to opportunities and pricing and team that would not be available to you if you tried to build this on your own, or it would take you significantly longer to build it on your own, and then the pricing model is probably going to be inferior to what we can talk about today. So I love the Dallas-Fort Worth metro, and we've been talking about Dallas-Fort Worth since 2008. And if you're a student of history, you'll see that we nailed the market in 2008, that Dallas was going to be a phenomenal market to participate in. And so here we are in 2018, and the question is that party over, right? Where do you go to invest now as a hassle-free cash flow investing member? And the party in Dallas is not over, right? It's harder to find deals, but the deals are still there. And in many ways, your team is more important than ever in finding those buying opportunities in a seller's market. And so you've heard me say over and over again that it's a seller's market. You want to buy in a buyer's market and sell in a seller's market. But today, we still have a buyer's market of interest rates. Interest rates are still historically low. And so what I'm excited about today is the ability to acquire brand new construction, single family homes whose cap rate exceeds the interest rate that is used to buy those properties. And so even though cap rates have compressed, interest rates are still low, and we still have positive arbitrage available to us. And so Leah has been developing an amazing model of finding new construction properties, very much like the homes that I've been building for the last decade, that fit the buying criteria that I'm very excited about. And if you've been in my organization for a long time, you know that the opportunities I bring are very few and far between, because I'm very, very picky about the product not only being excellent, but fitting a particular hassle-free cash flow model and having an amazing team to support your ownership of that property, your acquisition, and the management of that. And that's why our relationship with Leah is so exciting, because she can provide both the acquisition of the property and the long-term management of the asset. And it's really interesting to talk to a sales broker and say, hey, what do you think of this property? And they're going to say, oh, it's good, buy early and often, doesn't really matter, I'm going to get paid. Whatever you want to buy, I'll help you buy it, right? But when you talk with the property manager, you're going to say, hey, property manager, what do you think about this? Is this a good property? What's it going to rent for? And what they're looking for is not a one-time transaction. They're looking for a relationship for a lifetime. And that's what we look for in an investment client relationship. But Leah looks for that in a management relationship as well, because she wants to manage for you for a lifetime. And so when you ask your property manager, what do you think of this particular opportunity? She's going to give you the straight scoop on it, because she's the one that's going to have to deliver long term on those representations that she made at the front end. So, Leah, I've been singing your praises, and now I'd love to hear from you the big picture of what you have available for our investment clients.
Absolutely. So one of the first things I want to talk about is what Dallas offers today. So, of course, prices have gone up pretty significantly, and the entry-level pricing for most people buying into the market's pretty close to $250,000 and goes up from there. Of course, there's been tons of corporate relocations here between developers and companies and all sorts of things happening to bring these jobs to the Dallas area. So we're adding about 500 or more people a day in our Metroplex, so it's pretty staggering. And what that's done is it's created a drive in prices. And so the majority of properties that you're looking at, it's a lot of competition. So these on-market properties have 10, 20 offers. They're going way over asking. We're seeing things that we used to talk about in California and laugh about, but now it's here in Dallas. So our model is a little bit different. And so I want to just broach on that for a moment so that you can understand what our recommendations are and why we operate the way we do. So Dallas, everyone's calling for about 30% appreciation in the next 3 years, an average of about 9% across the counties that we work in. And so when you think about those numbers, that's a pretty significant increase in value just by owning property. But you have to do more than make money just on the appreciation, because of course we're investing cash and we're investing our time and money. And so we want to make sure that we're getting something during that process as well. The mistake that I see a lot of investors make is they buy anything they can get their hands on in Dallas just to buy it. So they're overpaying and they're buying a product that is already overvalued to begin with, so that if the market softens some, you have really no protection. What we do is we buy in the developing areas. We're buying across the major centers, right down the highway structures. So what we look for is to be 20 minutes to a major highway and 30 minutes to a major city center. And so we're buying in suburbs that aren't yet completely developed. There's a lot of revitalization going on, farmland turning into neighborhoods and developments. And so we're targeting these areas where no one else is really working. And then you pair that with the fact that we're working with exclusive builders who really sell their entire product line to me, so they're not hitting the market. So 99% of what I sell never hits the MLS, and no one even knows it's up and available. So what that means for you... go ahead.
Let me say why that is an advantage to a builder, because some people listening to this call might say, well, if it's so good, why don't they sell it on the MLS, right? And here's why. One, when you're working with an investor buyer, they don't care what color beige the house is. They're looking for a quality product that rents well. And I can say from a home builder experience that customer relationship with the owner occupant is very time intensive. It's more than about the money. It's about the amount of time that your sales team and your whole construction team is working with that particular buyer, with the cosmetic portions that really don't matter to an investor but do matter to owner occupant. The other thing is velocity. When you're working with a home owner occupant, very often they don't want to write a contract until it's done. And investors are very happy to pre-buy. They'll buy when it's on a plan, right? That's rare for owner occupant, but very common for investors to buy off of a partially completed home. And then the builder, once they've completed it, they can sell to an investor in a matter of days, versus an owner occupant sale might take an extra 60 days or 90 days to close after the home is completed. And that velocity that an investor can provide to a builder is everything. It's not just about the extra 3 months of interest carry. It means that now they can build, instead of using the same money to build 3 houses a year, maybe they could build 4 houses a year using that same money. And so in home builders who have a product that fits for investors would love to plug into a network like Handsfree Cashflow Investing and Leah's network of investors and her management team. And so when builders are selling product through Leah's network, it's very advantageous for the builder, and that's where the inventory comes available to us. And so it's not just about us selling product that wouldn't sell on the MLS. This product would sell on the MLS very well. It's just in the builder's best interest to sell it through an investor channel like we're offering.
Right. So we're working with small builders, and these are people that typically operate with a line of credit or individual loans. And what we're doing is we are contracting before they ever break ground. And so what that allows them to do is go back to the bank and get more leverage. So builders that would typically be able to maybe run 2 projects at a time are able to run 10 to 15 at a time. And so what it allows them to do is make more money by volume, which is really what our entire philosophy is in our property management side. And if you listen to the last webinar we did, it'll talk a little bit more about that. But essentially what we're doing is we're allowing these builders to become bigger overnight. And so for them, it's priceless because these banks aren't going to lend all this money and all this availability if they don't have these buyers lined up. So it's really, it's a win-win for everybody. But also, of course, our clients close. Home buyers are unpredictable, and you just never know what's going to happen with jobs and divorce, and you just never know. Things can go wrong. And with our people, with our lenders, we can bring a buyer and have it closed in 2 weeks. Yeah. So it's just a very different model. But what we're really targeting is this 3-4 year hold. And so let me explain a little bit about what that means. We're buying in areas that are heightened depreciation because of their proximity to the city and their heightened growth because of the natural growth patterns of these highways and the development. So we may be seeing 9% across Dallas-Fort Worth, but some of these areas that we've been selling these last few years, it's not uncommon to see 15%, 18% as these cities develop so quickly. I myself have a property I bought in one of these areas and I paid $114,000 for. It's now worth almost $150,000 and it's been 7 months. So it's a very, very quick developing market. That's not to make promises or guarantees, but anytime you're looking at a strategy, you want to think about what is my long-term goal. And so what we're thinking about are 3 different ways we want you to have cash flow in this market. Number 1 is going to be your cash flow monthly. So we're buying in right. We're buying in a good quality product that is not going to have a lot of expense. So all the properties we deal in have features that are really easy to maintain with the tenant in there, like granite countertops, hard flooring. So all the main areas will either have a laminate wood look or a ceramic tile wood look, crown moldings, washable paint, fence with metal posts instead of wood posts so that they're not getting so weather damaged, all sorts of little things we've thought about so you don't have to. And the other thing that brings a benefit to the builder for is that they have one product and all they do is swap out colors property by property, but they're basically identical. So we can work on 3 color patterns, 3 floor plans, and that's it, and we're done. So it's a very simple process. So what we see is we see this cash flow every month. Then we have the buy-in price that you're getting a little bit of a discount over what market would be. And I have to tell you how important that is because in Dallas right now, you're overpaying. So to even pay at market or below market is pretty much unheard of. So it's a great deal there. And then of course you have this heightened depreciation. So what it allows us to do is you take your cash flow each month, you let the property appreciate, and sometime between 2 and 4 years is the pattern we say. And at that point, when the property doubles in value, we 1031 exchange it and you turn that one property into 2. That's the path to massive wealth. Now you've got 2 properties appreciating, 2 properties cash flowing. You've still made your profit as you go and you have no more cash invested than when you started. So it's a very, very heightened path to those who want retirement or want passive income to be able to do more things that they're wanting to do. And so it's been our model all along, and certainly what the market is doing right now allows us to do that even better. The protection that I feel these areas offer is number 1, you've got a better risk of appreciation, and you also have less risk of it falling. And let me tell you why that is. So many people are concentrating into the main metroplex and the main cities. So you've got all these prices going up. We are 40% over in most areas where we were in the height of 2006 and 7. So let that sink in for a minute. Think about what prices did back then. We're 30 to 40% over that now. Now, Dallas is pretty uniquely protected. We have more jobs than we do people, and there's so many companies coming here every week. So if Dallas really gets hit, we have a much bigger problem. But that said,
I want to echo what you said. There's more jobs than you have people, right? Yeah. And with 500
there's
people,
just so many employers all the time.
Yeah, 500 people a day coming to the metro means you need about 200 new dwelling units per day. And even though there's a huge building craze going on in the metro right now, it's not 200 a day, right? And so when you have jobs, you get people, and those people need a place to live. And the metro simply is not providing that housing fast enough. And it's the same thing I've been saying for the last 10 years, and it's still true. It's amazing to say that like, David, I've heard this story before. Well, it's the same story because Dallas continues to grow their jobs because the tax structure and the political structure there is very, very pro-job growth. It's low cost of living. And the other thing is people say, well, what other metro would you look at? I can't think of another metro, right? If there were a better place, a better market to invest in, I mean, I'm not in Dallas. I'm in Oregon, and here I am investing my money halfway across the country for the last decade because Dallas is that strong of a metro. And the product that Leah has access to, it's the good neighborhoods. They really are good neighborhoods. They're the places that I'm very happy to invest in myself. It's new construction product with a builder warranty, and you've got strong management in place, and the math makes sense. And those are the big things to be excited about. And a lot of what has been a gap in our inventory pipeline for our investors is simply because there was no product available. We went through a period of time where there was no product available. People would say, David, I want to buy more of what I already bought from you. Can I buy 3 more? And I would say, there's none. Sorry, I would love to sell you 3 more houses just like the one you bought. But there are no more, right? And so now there was a gap in time where the infrastructure had to catch up, where people had to add the lots, the streets, the curbs, the gutters, the utilities into these suburban neighborhoods of Dallas and start that construction cycle over at a place that is low enough for investors to make money. All of that infill development that I've been doing, that infill development is either A, gone, or B, now cost prohibitive for investors. The cap rate's just too low. And so by going into those high growth suburban parts of the metro where prices are still low, rents are still strong, we're getting those cap rates again that we saw several years ago. And so that's why I'm excited to bring you this opportunity, and I really hope everyone at home that has had success owning a hassle-free cash flow investment single-family home really reconsiders the opportunity to double down or triple down into another home in the Dallas market. I'm that excited about what I'm seeing in the marketplace right now.
Yeah, and what we're seeing is that we're able to get in at a price, as price and values go up, the rent doesn't go up at the same rate. And so we're really buying in areas where we're still right at that 1% mark. And so it's pretty hard to find that these days. And so what we look at is so many people are holding on to properties that are worth so much more, and they're maybe renting at 0.6, 0.7. And you start looking at those returns, and it's just not what it could be in some of these areas that we're looking at. So we're targeting very specific returns so that we could get back to the numbers that we were getting back in 2008, 2009 after the crash. So we're real excited about the product, and I myself buy 1 to 2 every single month as well. So I can honestly say that I'm buying in the same areas that we sell in that we're recommending. So it's certainly a strong belief in that product.
Yeah, that 1% of the purchase price in rent per month is a really cool metric that I've been teaching, and it disappeared for a while. The only place that I could see that 1% of the purchase price per month in rent was in areas that I didn't want to invest in, or really old product that had a lot of deferred maintenance attached to it. And so to get brand new construction single family homes anywhere close to a 1% of the purchase price per month is awesome, right? And we're for a while it was down, as you said, 0.6, 0.7 of the purchase price per month, and now we're seeing opportunities to buy again.
Yeah, and I think it's important to note we also have offices in Houston, San Antonio, Austin as well. And so this is not the only market we have experience with in Texas. And that's not to say that there aren't other strong markets, but if you want the best of the best, and you want the best potential for that, extreme wealth and growth, Dallas is it, and it's always going to be it, just because the jobs, the city center, the cost of living, all the things that you don't really have in these other cities.
Yeah, I mean, who knows what life's going to be 100 years from now, but 20 years from now, I think Dallas is still going to be pretty good. And so that's where I'm putting my money on is, what's the market going to be like in my lifetime? And I don't see any other market that compares in terms of job strength, population strength, low cost of living, low exposure to natural disasters. Even though there's a lot of great things to say about Houston, we're in the wake of a large hurricane in Houston, and that was problematic or a hassle for a lot of investors. And Dallas simply doesn't have those exposures to earthquakes and hurricanes that other metros have. Even things like snow, it's pretty modest to have snow in Dallas compared to other metros. So, Leah, let's talk about a case study. Maybe not an exact property, but something that an investor could buy.
Absolutely. So I'll use one of my personal ones as an example that I just acquired. And so this property was an almost 1,600 square foot, 3-bedroom, 2-bath with a 2-car detached garage, fully loaded, and all those upgrades that I mentioned. The purchase price on that property was $150,000. And of course, we put 20% down on that, and we have lots of loan options for clients to go with 20% well past the standard 10. So don't be worried about that, but we have many people we can connect you with if you need those recommendations. And so that property, I rented it at $1,425. It rented immediately. And if we look at the numbers on that, the taxes, so one of the benefits of new construction is depending on the time of year in which you buy, often that first year you're only going to have land value as your taxes because the property wasn't yet built when the appraised value was set. And so you can almost get a year free of not having to pay those taxes depending on the time of year in which you buy. So in my case, that worked out for me. So my tax bill was about $6 a month. Now, upon reset, it'll be $300 a month approximate. And then insurance cost was $60 a month, and the mortgage was $660 a month. So after you take a property management fee out of there, the cash flow on that property is over $300 a month. That's before, of course, your equity pay down and your appreciation. I talk a lot about cash on cash returns, and so those numbers on this particular property are over 12% on the cash on cash return. And then if you add appreciation in there, it goes well over 30-40% because of those numbers when they add up. But with principal pay down, just your regular cash flow monthly and paying down that principal, you're making almost 20% a month. So it's a pretty fantastic, or 20% a year rather. So that's a pretty fantastic return.
Yeah, and that's why people like real estate, is that leverage gain based on what the future value is. And with the new tax laws for 2018, there's potentially some additional advantages of some accelerated depreciation for investors who want to take advantage of some accelerated depreciation on their investment purchases. So that could be another bonus for investors. When we are looking at the opportunity to borrow money 5% or less and to get a cap rate of greater than 5%, you're making money on the bank's money. And that's the big point of this opportunity in history, because it isn't always that way. Usually when cap rates are high, interest rates are high. And when cap rates are low, oftentimes the interest rates have been still low, but still higher. And so to borrow money below the cap rate, making money on the bank's money, A, it doesn't happen very often in history, and B, it doesn't happen in every market, especially not with brand new construction in a hot market like Dallas.
Absolutely. And that's one of the reasons why we, of course, ourselves are buying. Now, I also have access to new construction duplexes and fourplexes, so this isn't just single family. So depending on what you're looking for, we have lots of options that may work for you. And of course, the returns vary across the product. So the way that we operate is if you're interested, you just need to reach out to us and we'll send you over some paperwork to sign. And then we give you access to our investment list. And from there, you're going to see all the available options. As of today, we have 52 available. And you can look through that list and let us know any questions. And of course, there's floor plans and photos and information on all of those options. And if it's something that you're more interested in, we can talk about it in more depth.
Awesome. And I really want to underscore that Leah's company is fantastic to do business with. And of course, by me making an introduction to Leah's company, I do earn a real estate broker commission as a licensed real estate broker. So I am getting a referral fee by referring you to Leah. But we do have some very special incentives specifically for hassle-free cash flow investors who are working through me to buy inventory through Leah's company and her property management company. So one of those big bonuses is a strategic relationship with me directly, and the ability to have a consulting call with me to say, hey, David, here's my situation. Here's the property I'm considering. What do you think? Here is my property management challenge. What do you think? And to be able to have access to me on a direct dial basis is a huge advantage of working through the hassle-free cash flow investing network and plugging into Leah's company. The other great thing is that we bring to Leah a large volume of business. And so that large potential volume of business will allow you to stand out as a potential customer. You're not just one person buying a home through Leah's company, even though she'd give you amazing service, even if you were just one, you represent a larger buying group. And so what that does is it gives you a little bit more relationship strength, a relationship with me, and then my relationship with Leah can be leveraged. If you as a client need a little extra love, I can say, hey, Leah, this guy, he needs some love, right? Let's take care of this problem. And that's just the way that we work, is we're here to support you. We're here to support you, the investor, for you to succeed over a lifetime. And for me, as a person who started out with my primary investments being single-family homes like the ones that we're talking about, I really wish I could go back in time and had a mentor, access to mentors like Leah and myself to really help you understand the opportunity and to help navigate the waters, both on the acquisition, the long-term management, and finally the exit of the property, or the exit of the asset, and the repositioning of that equity into more lucrative investments. And so it's more than a property, it's a system, and that's what we're offering to you today.
Absolutely.
So Leah, if clients are interested, then what's the best way for them to express their interest and get started in that non-disclosure agreement? And can you walk me through the whole life cycle of from today until the time someone has their first rent check?
I'm sorry, David, it cut out.
Sure. Can you walk me through a life cycle of what it looks like from someone today when they're interested until the time they get their first rent check from your management company?
Absolutely. So depending on the timeline of completion of the property you choose, it could be something that's almost completed now or something that's going to take a couple of months to build. So once the property closes, we list it immediately, and typically you'll have a tenant lined up before even that first mortgage payment is due. Now with our property management company, we pay out rents at the beginning of the month once they come in and clear. So you'll receive your rent check sometime between the 5th and the 8th of the month, and we send those by ACH. Now, if you're working with a trust company for IRA investment, then we also, of course, mail those options since that's what they prefer.
Awesome. And so many of my investors are looking for a very hands-free, passive, semi-passive, hassle-free experience. How do you and your team make that experience very hassle-free?
Of course. So on these new construction properties, it comes with a warranty, as you mentioned, a 1-year bumper to bumper, a 2-year systems, and then a 10-year structural. And so really for the first 2 years, there really shouldn't be anything that is going to be something outside of the norm. Now, of course, things can come up, but we go directly to the builder and handle those, and you're only involved if it's something we need your help or involvement in. Now, one of the things that we do is we do contact you anytime there's a repair. You don't have to respond. You don't have to let us know anything. We're just letting you know what's been submitted and what we're doing to take care of it. So it's still no involvement from you, but it's just that you are always up to date. And our system that we utilize is up to date 24/7. So you can log in and see your payment history, see the tenant's documents, your documents, everything about the property 24/7. And so you could reach out to us, but there's no need for you to unless you have a question. We also do quarterly visits at all of the properties. So we're checking on the tenants and the property. And if there's any issues, we handle those directly at that time, and that's included in our fee. There's
That's
no extra
incredible.
charge for that.
No one does that, Leah. No one but you does that quarterly visit, right?
No, it's
and
an amazing thing.
I used to do property management, residential property management, and here's how often I would go, and I don't do it anymore because it's a very, very difficult business to do well. You only go to the property when there's a problem, right? Oh, the tenant didn't pay rent. Let me go check it out, right? We got a letter from the city. Let me go check it out. A neighbor calls. Let me check it out. But if the tenant's paying and nobody's calling, then you don't go. And so that is not the best way to do property management by a long shot. And so by you saying you go quarterly, and I've seen the reports that your team provides, and it's a pretty impressive report.
Oh, yes. So our best tenants see us once every 3 months, and our worst tenants, well, some of them see me weekly. It just depends. But those walk visits aren't just to check on the tenant. It's to make sure that there's not something that they're overlooking. So maybe there's a roof leak they don't see. Maybe their neighbor has a dog that's busting through their fence. You just never know. And so we have 2 people whose full-time job is to do nothing but check on these houses for us. Yeah. And so it's a great trust that you can have in us. And it's also a great comfort you can have in your investment because you know what's going on. Yeah. And so I say all these things to say that this is what's going to allow you to have that hassle-free, is that we are taking care of everything and fixing issues on the front end so they don't turn into big blow-ups. And then, of course, by positioning ourselves in good cities and good markets and good products, that's how we minimize your time and your effort and, of course, the money expended. Because if I was selling you houses in the heart of Dallas and the crime-ridden areas built in the 1960s, we'd be having a very different conversation.
Yeah. Leah, thank you so much for your time today. And I'm very excited to be introducing the hassle-free investing clients to you and your team, because I know you're going to do a fantastic job taking care of them and delivering great returns and a very hassle-free investing experience.
Wonderful. Thank you so much for having me.